Microsoft is an amazing company that I always wanted to own. I love the company. I'm a big fan of the business model, very high margin. It's just an amazing company. But I always skipped it because I believed the stock was overvalued. And I kind of still believe the stock was a little bit overvalued into 2025. But the stock right now is down over 10% after the tariff announcement. It's sitting around $370 per share. So in this video, I'm not going to try to analyze the tariffs. I'm going to try to analyze Microsoft, analyze companies, try to ignore the noise in general, let you know my opinion on Microsoft. If I believe it's presenting a generational buying opportunity, if it's finally at fair value for Microsoft, or maybe the stock is just still overvalued and we should wait for a lower price. So I really hope you enjoy it as always. Most of you guys know how Microsoft makes their money. Most of it is mainly through Microsoft 365, LinkedIn, and business and productivity. Now, what has really surprised me about LinkedIn, which I didn't know, and it actually generates $17 billion every single year. And I really didn't expect that. And the growth was insane. They scaled it from 8.4 billion to $17 billion since they acquired it for LinkedIn, which I don't even use. And it just really surprised me that LinkedIn generates $17 billion in revenues. That's absolutely insane. But they also have the beast, which is Azure, Microsoft Azure Cloud. It makes 25 billion, over 42% operating margin, which is insane. And Azure, by the way, is still growing 31% year on year. This is insane growth for a piece of the business like Azure. Then they have $14 billion in personal computing like Xbox and all Windows and all these kind of things. Their AI revenue has been growing 175% year on year. This is insane growth for the company. Now, the last quarter was actually an amazing quarter for the stock. They got 323 versus 311 expected for revenues. They also did a slight beat on revenue, but the main reason why the stock went down was because of guidance. Guidance, they guided between 67.7 to 68.7 versus the consensus of 69.7. So they missed it by $1 billion. It's really not a big deal, but Wall Street kind of overreacts to that stuff. But I believe Microsoft will likely beat those estimates, and many companies will beat the estimates because a lot of them, they based their guidance on a strong dollar. We had a strong dollar going into Q4. Companies like Uber, they lowered their guidance by 7% due to a potentially stronger dollar remaining in 2025. But this has actually reversed, and the dollar has taken a massive plunge from 110 to 103 on the Dixie, which is a dollar index. So I believe the guidance of those companies and the actual results, they're going to differ materially. And it's going to be much better for Microsoft. They're going to see currency gains instead of currency losses. And I believe they're going to ultimately beat on those estimates. But I believe Microsoft isn't really, there's nothing really wrong with the business, but they have sometimes good years, good quarters, they grow 17, 20%. But sometimes they have decent quarters where they grow 10 to 12%. The company has had an amazing quarter, 17, 16, 15%. And it would have been foolish to believe that Microsoft can sustain such growth forever. But now it's around 10%. And I believe 10% is still amazing growth for Microsoft, especially considering the quality of the business, how much they have expanded net income margins from 23% in 2015. Now they're around 36% net income margins. This is insane margins for the company. Now, it is an amazing company. I love the business model. I love the margins. I love the moat. I love the competitive advantage. But I stayed away from Microsoft mainly because of the price, especially when Microsoft was trading at 36 times earnings. I just couldn't find any justifications for Microsoft to trade at 36 times earnings. And that's why I've been avoiding the stock. And that's why the stock has been flat for almost 2 years. And it's been the weakest of the big seven because it has been a little bit on the higher end of the valuation compared to its historical average and compared to the growth that the company is experiencing. Now, Microsoft right now is trading around 27 times earnings. The mean over the last 10 years was 16.5. It traded as high as 37 times and as low as 15 times. And I don't believe we're ever going to see 15 times again for Microsoft. So I believe right now, as it's approaching approaching 26, 27 times. It's getting closer and closer to some kind of valuation that you could actually digest if you really want to own Microsoft for the very long term. But for my valuation model, I did take a look at the analyst estimates for potential earnings per share growth. And I believe they have some very fair estimates of around 11% this year in 2025, then 14%, 17, 13, 15. So around 13 to 14% average earnings per share growth. This is very fair for the company. And that's why I'm going to use those numbers for this video. And all I did for the video is I got their own estimates of $23.08 per share 5 years from now. And I used the mean PE, which is 27 PE. And then I used the higher end of the range, which is around 30 PE. It might not trade at 30 PE, but sometimes over time, those companies get a multiple expansion. So I kind of used a base case scenario and I used the best case scenario. Now, using the best case scenario at 30 PE, for me to get a double on Microsoft over the next 5 years, I would have to buy Microsoft at $346 per share. And the main way I got this calculation is I took $23.08. I timed it by 30 PE. This is $692 per share. I'm trying to get it double over the next 5 years. So if I divide that number by 2, I would get around $346 per share. So for me to get it double over the next 5 years, I can't pay anything more than $346 per share. Now, if you want to take some margin of safety in case the growth deteriorates, in case something happens with their AI businesses and all these kind of things, and you just want more margin of safety, then in this case, if you want to take a 27 PE, you would not pay no more than $311. But I don't really know if Microsoft will go to $311 per share. So for me personally, the way I look at Microsoft is I kind of have a price alert at 365. If it goes below 365, then I start watching the stock more closely. Once it gets anywhere between 345, 346, and 311, I think this is the sweet spot to start a small position in Microsoft and dollar cost average down if you're really dying to own the company. For me, I want to own the company, but I just keep finding better and better and better deals in this market. And that's why I haven't bought Microsoft yet. But if you do like Microsoft, I recommend trying to get a small position between 350 at least and 311, and then see where it goes from there, dollar cost average down, or maybe even average up if this is where Microsoft eventually bottoms, as a lot of those quality stocks, sometimes they just never get to the fair values that we believe they should be trading at, and they kind of bottom at a higher valuation. But I believe between 311 and 346 is a sweet spot for a small position. That's just my opinion on Microsoft, not financial advice. Hope you enjoyed it as always. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.